it was quite topsy-turvy between the three participants. But to a broader discussion, and we've seen a lot of people opting for fixed income as an investment option in the last 2 to 3 months, and a lot of corporates are coming out with attractive options as well. The NCD issues primarily, and a lot of corporates have already come out. The rates keep on increasing. Every time you thought that you missed out on one, pop comes the other one at a much higher rate of interest. And this time a much higher rate of return, and this time around it's Religare Finvest which is going to come out with an NCD issue. The rates are fairly attractive as well. To talk about that and talk about this broad space, we're joined by Kavi Arora, CEO of Religare Finvest, as also an expert who tracks this entire market fairly closely, Ajay Manglunia, Senior VP, Fixed Income and Currency at Edelweiss. So both of these gentlemen join us right now to speak about this. Kavi, I'll come to you first. You're looking at borrowing via that NCD retail issue. When will you come to the market with this issue? When will you file the prospectus? Could it happen in the next, say, 2 weeks?
Well, we are very shortly going to file our bond issue with the regulator. As of now, I can't disclose the exact details. You will very soon hear from us, as we file the prospectus.
So on the NCD issue itself, Kavi, you plan to hit the markets, I believe, if I'm not wrong, at the top end of the rate cycle currently. I mean, just wondering, wouldn't you ideally have waited for a little more time for the rates to peak out and then coming in a rate of interest which is slightly lower than what it could have been?
See, in the broader context, the interest rate cycles will keep moving up and down, and when you set up business for a longer term perspective, some of these cycles, they keep kind of, they even out over a course of time anyway. You are right, maybe we are almost at the peak, but this is a normal program which will carry on. We're just initiating a program of borrowing for retail, and this will keep happening at all, interest rate kind of cycles.
Kavi, give us a sense of, what really makes you chase the public through this NCD issue. I mean, there are lots of NCD issues coming into the market and very well received from investors. What's the rationale and what's the drive behind this?
Well, we have had NCD issues earlier as well. This is not really the first. This is, one in the retail side of it, and it is for larger public to also participate in the growth opportunity that we foresee in the space of financing, and how they can participate at a good return for them at a good coupon price, and to be part of this growth in the industry.
Come to you, Ajay, on this very question. Just a broad sense of the kind of NCD issues that have been hitting the market at the higher end of the rate cycle. What's your own sense about whether or not investors should subscribe to these issues at this point in time, or wait perhaps a little longer, to see where how rates actually pan out?
Surely it's a good opportunity for the retail investors, especially when we are talking about rate hike scenarios after the continuous 11 rate hikes on the way. I believe investors are getting a decent yield. At the same time, most of these NBFCs who have been borrowing through the bond issuances, those issuances are secured in the nature, so the money is safe, and these are rated by 2 rating agencies. The lowest rating for these any NCDs so far have come to the market right from AAA to AA-. The response has been pretty good for AAA and AA plus rated category of the NCDs. At the same time, you are getting the yields which are about 12% kind of a level, 12 to 12.5% for NBFCs in a duration of 2 to 5 years. I think that's a pretty decent yield. Investors who have a savings and would like to lock in their savings for a higher yielding instruments, they should participate.
Ajay, a lot of people ask us whether this 11.5% rate of interest is a much better instrument to park into, or should you just opt for a safe FD in a large private or a public sector bank. What would you advise? Because the rates are still higher in an NCD issue. Is it safe to subscribe to these issues? Have you looked at any in particular? There have been 3 or 4 which have come about.
Sure. The NCD issuances so far coming into the market, bearing the banks, State Bank of India, which was AAA rated, though it was not secured, it's a tier 2 capital, but it's an absolutely safe instrument. As far as the other instruments which have come to the market, like the and non-banking finance companies issuances and all, they are offering slightly better rate just to attract the investors, because these investors have not been in the habit of making an investment in the non-convertible debentures so far. The traditional investments in the bank deposits and the corporate FDs has been the way. To attract them and to get them into the NCD market, you have to offer slightly better deal, and that is what most of the companies are trying to get the investors and develop this market, which is an alternative channel for them. At the same time, as far as the difference between the FDs and NCDs, it's very visibly clear that NCDs are secured, that these are rated. FDs are though rated, but those FDs are not secured. So in any eventuality, the secured instruments are better than the unsecured one. And you are getting a better interest rates as well. The second difference, which is a major one, is the tradability. In the bank deposits or in the company deposits, you don't have a trading options. Whereas in the NCDs, whenever you need money, you can, these are listed, you can sell off, you can realize your money, you can encash your gains as well with the drop in the interest rate going forward.
Right, Ajay, many thanks for joining us and giving us that quick perspective on NCDs, clearly an option that investors are looking at this point. To a big corporate voice, and we have Mr. Akhil Gupta.